lawmakers, and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Doha, ahead of the Qatar Economic Forum, which begins tomorrow. And these are your top stories. Sell America is back. The 30-year Treasury yield tops 5% for the first time since April. U.S. futures fall, and the dollar slides after Moody's strips the U.S. government of its top credit rating. President Trump is set to speak on the phone with Russia's Vladimir Putin as Washington looks for progress after last week's failed peace talks between Moscow and Kiev. Plus, resetting relations, the EU and UK negotiators are said to have reached a deal to strengthen their post-Brexit relationship ahead of a crucial summit today. Now, we'll also speak exclusively to the EU's Foreign Affairs Chief, Kaja Kallas, in a short while. But first thing is first, let's look at the European markets map. Now, again, there is quite a lot going on in the markets. We look at treasuries, euro, dollar, and a lot of U.S. assets. Now, Moody's ratings downgrading the credit rating of the U.S. government, citing a ballooning budget deficit that shows little sign of narrowing. So if you look at futures in the U.S. are dropping. You can see also a lot of the European stocks on the downside. The Treasury yield curve steepened after this change from Moody's. Again, if you look at a gauge of the dollar, I think we can go cross-asset. That's weakening 0.3%, and then European stocks falling. Bullion, actually, gold, the only thing that we're looking at that's getting a little bit of support, gaining some 0.9%. Appetite for the haven asset boosted by concerns about the U.S. economic outlook and budget deficit. Now, the Treasury Secretary, Scott Bessent, has downplayed concerns about the U.S. government following that downgrade from Moody's. Bessent spoke to NBC's Meet the Press.
We didn't get here in the past 100 days. It's the Biden administration and this spending that we have seen over the past 4 years. You know, we inherited 6.7% deficit to GDP, the highest when we weren't in a recession, not in a war, and we are determined to bring the spending down and grow the economy.
Now, for more, let's bring in Roz Matheson, EMEA News Director. Roz, what's the reaction been in Washington to the downgrade news?
Well, as you were just showing, Scott Bessent, the Treasury Secretary, he's been saying this is something that's a hangover from the Biden administration. He describes the Moody's move as a lagging indicator, and to some extent he's not completely inaccurate in that, because Moody's was, in essence, catching up to the other ratings houses. This move was anticipated, including by the market. So you're seeing an interesting reaction, obviously, in the long end of the Treasury curve, a bit in stock futures, but not a massive flow through elsewhere in the financial markets today. But what it does do, if anything, even if you could say that Moody's is a bit symbolic, as per Scott Bessent, it does come at a time there are real concerns about the fiscal outlook in the US. And you can see a lot of conversation in Washington about that, particularly with Trump's tax bill that he really wants to get pushed through the House. You know, his very omnibus tax bill at this point with a lot of other things attached. This tax bill is important, possibly for the US economy in many ways, but including what it does for borrowing down the track. And does this Moody's move really highlight the concern about unfunded liabilities in the US economy and those questions again about sell America? Is US exceptionalism gone? You know, the safe haven aspect of US assets gone. And so a lot of, officials in the White House fanned out saying Moody's doesn't really mean anything, but it does point to those concerns longer term about the US economy.
So we also heard about, Trump's tax bill, and that's advanced through a key House committee. What do we actually know, Roz?
Well, that's right. So it did get through the Budget Committee overnight. That's after a couple of hardliners got their way in terms of they want cuts to Medicaid or access to Medicaid for quite potentially a large group of people. And this is the issue again with this bill. So it got through this committee. It gets towards a House vote at some point. But at this point, this bill is so sprawling and so large with so many things attached to it that getting it through is very, very difficult. I mean, Republicans fundamentally do want tax cuts, but there's a lot of other things now that are moving parts with this that could cause problems for it in the House and obviously also in the Senate if it gets through the House. And that's things around Medicaid, but also around, deductions from federal taxes, from state and local taxes. There's also the questions around phasing out some of the clean energy credits. There's a lot of things packed into this bill, so it's harder to get it through. And even though it got through committee, the outlook for it is still very uncertain.
Yeah, and Roz, we had some, big breaking news, sad news yesterday from the U.S. that Joe Biden has been diagnosed with an aggressive form of prostate cancer. What do we know actually about the illness?
Well, that's right. So as you say, it's an aggressive form of prostate cancer, and it is actually, it seems, in his bones. But also it's a form that can be treated quite successfully with hormone treatment. So it is an aggressive, fast-moving form of prostate cancer, but it also responds quite well to that hormone treatment. And so prostate cancer is obviously, one that is being diagnosed more and more around the world, including in the US, but it's also a cancer that can be treated more and more. And so for the president, there's the question of what does this do to his daily life? We've seen him step back quite a bit since the election from daily life. He's been popping up more and more recently in interviews because there's a lot of resumed conversation around his mental state during his presidency, and he's been coming out to defend that. Does this lead him to take a low profile again? So there are questions around what it impacts him personally in the minute, but also what does it do to his time in daily life in America?
Roz, do you know if actually both parties will put differences aside, the Republicans and the Democrats, given the illness?
Well, certainly you saw Donald Trump come out immediately last night and issue a statement that he was wishing Joe Biden well with his treatment and sending him his warm regards. I mean, Donald Trump is a person who has been extremely critical of Joe Biden over the years, including calling him Sleepy Joe, questioning his mental acuity through his second presidency. And that's been something that he's really latched onto, but an immediate message there of concern for Joe Biden, his family. Of course, for Biden, cancer is a very personal issue, of course, with his son, dying of cancer. So there's a lot around all of this for the Biden family. But it seems, at least for now, Donald Trump is just wishing him all the best.
Roz, thank you so much. Roz Matheson there with the very latest, of course, news from the U.S. Now we're joined by Jennifer McKeown, Chief Global Economist at Global Economics. Jennifer, thank you for joining us. I mean, we all woke up to the news, and I think the first time I heard actually a big Wall Street person, it was Ken Griffin here in Qatar exactly a year ago, warning about deficits in the U.S. We all woke up to the news about Moody's. Does it change what you're expecting economically the U.S. to do over the next 12 months?
No, I think it's a short answer. As we've just heard, this is really just a matter of Moody's following what other ratings agencies had already done, what was already known in financial markets about the very poor state of the US public finances. That said, it does highlight that Trump's wiggle room is very, very limited in terms of what he can do on fiscal policy. We've always known that he was really beholden to the market in terms of any further fiscal loosening. I think really, although tariff revenue might give him some scope to spend, he can't go much further than the tax bill that's already gone through the House Budget Committee.
Jennifer, what are you looking at in terms of possibility of a recession in the U.S.? Again, we spoke to many Fed governors, Fed presidents, and it does seem at the moment that if you look at the dual debt mandate, they may wait a little bit because they worry more about inflation than, for example, unemployment. What trajectory do you see the U.S. taking?
Well, we're not forecasting a recession, and I think the recent data actually have very much been in support of that. We've seen a slight softening in retail sales and industrial production, but really nothing to be too concerned about. And at the same time, the labour market, which of course is crucial, is holding up very well. The payrolls data still look good. So, it could also obviously get a lot worse. It's very early days so far as tariffs are concerned. But at the moment, we're putting the probability of a US recession at less than 30%.
And do you worry about inflation in the U.S. more than you do about GDP?
Yes, yeah, we do, and we think the Fed will do as well for a little while at least. I think that tariffs are a stagflationary policy, but I think probably the impact on inflation will be bigger than the downside for activity. We're expecting inflation to go to about 4% later this year on the basis of current tariff policies. And I think in that environment, although this should, on the face of it, be a one-year hit, a level shift in prices, I think given the recent experience that the Fed is going to be concerned about whether this might prompt second round effects into wages, into broader prices. And so I think it's going to stay on hold for the rest of this year before perhaps considering further rate cuts next year if this inflation shock does prove to be a temporary one.
Jennifer, is there a danger that actually, it's a bold call to actually call for no cuts from the Fed this year? Is there a danger that then they'll have to cut quite aggressively and quite quickly into 2026?
It's possible. It just depends very much on what's going on in the economy, doesn't it? And assuming that the economy does remain as resilient as it has done lately, then I don't think there would be a case to cut aggressively. I think US interest rates are currently only a little above the equilibrium on the neutral rate. So it only takes a couple more cuts to get back to kind of a normal policy stance. And in an environment where the economy is still growing, albeit perhaps a bit slower than its potential, then that's fine. Of course, if we do start to see a bigger downturn, particularly if there are significant job losses, then the Fed will just act sooner, and we'll get those rate cuts coming through possibly this year.
Jennifer, give me a sense of what you learned about, trade and tariffs. Again, there's this holding pattern, I guess, between the U.S. and China. We had a big trip of President Trump in the Middle East. Things were signed, thin on details. Does it give you a better idea of what the Trump administration wants to do when it comes to trade and tariffs?
Oh, crikey, it's difficult, isn't it? I think essentially we are pretty much in the situation that we thought we would be at the outset of Trump's presidency. We had assumed that there would be a universal tariff of around 10%, and that tariffs on China would be much, much higher, just given the extent of the imbalance there in the relationship between the two economies. We'd assumed about 60%. If anything, it looks like it may be a little lower than that at the moment. But there's so much uncertainty. There are several flashpoints coming up, most notably the end of the 90-day pauses on tariffs, both the Liberation Day tariffs and the tariffs on China are paused for 90 days. So heading into July and August, there's going to be some tension for sure. So we're looking for more of these types of trade deals, the kind of thing that we saw from the UK and what we're seeing in the Middle East too. But as you say, it is pretty light on detail at the moment, and it's not clear that it's offering all that much reassurance, particularly when a trade deal, even with the UK, which is an economy that does not run a large surplus with the US, we've still not had that 10% tariff removed, and we've got no really clear assurance on sectoral tariffs either. So limited progress, I would say, and a lot more uncertainty to come.
Jennifer, thank you so much for joining us. Jennifer McKeown there, Chief Global Economist at CATL Economics, looking at some of the flashpoints, possibly early July. Now, coming up, we'll also speak with the EU's Foreign Affairs Chief as the UK holds a summit to reset relations after Brexit. So that interview is next, and this is Bloomberg. Welcome back, everyone. I'm Francine Lacqua. This is The Pulse, and we're live from Qatar. Now, the UK and EU are said to have reached an outline deal on strengthening their post-Brexit ties. Leaders are due to meet at Lancaster House in London this morning. Lizzie Burden, our UK correspondent, is there. Lizzie, so what details do we actually know so far?
Well, Francine, they were hammering out the details until 2 a.m. this morning. But as you say, it looks like a draft has been agreed, even if it needs to be approved by the political leaders on both sides. Now, that is set to include, first of all, a defence and security agreement. Secondly, a common understanding on future cooperation, which means on things like travel, access to e-gates at passport control. And then thirdly, a common understanding of how they're going to work together as allies in these uncertain geopolitical times. But this is a crucial moment diplomatically post-Brexit for both sides. You've got the need to show unity in the face of Trump's tariffs and Putin's war on Ukraine, but of course, as ever, the need for political leaders to project strength in the face of right-wing opposition parties back home. So both are going to want to look like tough negotiators. We're expecting leaders to arrive here at 10:15, just under an hour's time here in London.
Lizzie, so what are the thorniest issues?
Well, Francine, fish, as ever, you'll remember it well from the Brexit days, has been front of mind in these negotiations. But it does look like they have reached a reciprocal agreement to extend fishing rights for more than a decade, to 2038. Now, originally, Britain had wanted just a 4-year deal here. But France said, well, if you want to do 4 years on fish, we want 4 years on food checks, which, of course, would create uncertainty for Britain. They also, we hear, said we're not going to do a deal on defence if you won't agree on fish. And one British senior official said to us, that's ridiculous. The idea that they would squander the opportunity to show unity to Putin just to get better terms on fish. But I know you're speaking to Kaja Kallas in just a moment. She is, of course, the EU's top diplomat. Even on Friday, she was saying that they just weren't there on defence. So in order to thread the needle, it appears that Britain's agreed to a longer deal on fish. That's paved the way to a longer deal on food checks and energy cooperation. And to open the door on defence, it appears that the UK has agreed to working towards being part of this EU Erasmus student programme with a time-limited youth visa as well. So, as ever, a very complicated game of diplomatic chess, but it looks like they've managed to get there.
Lizzie, when you look at, domestically, what the leaders, of course, have to face at home, how limited are they because of politics, domestic politics?
Completely, and the EU, of course, has 27 members who all need to have eyes on this and agree to it, all of them wanting to, as I say, show that strength at home, none of them wanting the UK to be able to cherry-pick the benefits of EU membership without agreeing to the commitments like free movement of people. Keir Starmer, it should be noted, is somewhat sympathetic, perhaps, to these arguments. He was once the arch Remainer, don't forget. He advocated for a second Brexit referendum, and he needs that economic growth. Some economists like ING have said that a UK-EU trade deal could unlock £15 billion for the UK Treasury at a time when the Chancellor Rachel Reeves is extremely fiscally squeezed. But, of course, he's got the threat of Nigel Farage, the former face of Brexit, whose Reform UK party has seen some electoral success of late. The Conservative leader, Kemi Badenoch's already calling this the surrender summit. So Keir Starmer needs to show that he is a tough negotiator. He's already agreed to this US trade pact, which of course includes an agreement on that 10% minimum tariff, much to the chagrin of some EU officials, by the way, who've got to negotiate their own deal with Washington. So it's very important today that Starmer can show he is not caving to Brussels.
Lizzie, thanks so much. Lizzie Burden there, of course, outside Lancaster House. Now, President Donald Trump says he'll have a phone call with Russian President Vladimir Putin later today to discuss how to stop the war in Ukraine. This comes as Kremlin forces launched the largest drone barrage over the weekend since the start of Russia's full-scale invasion back in February 2022. Now, for more, let's bring in Bloomberg's Oliver Crook in Berlin. So, Ali, a source has told Bloomberg that Putin is feeling pretty confident ahead of this call.
Yeah, that's right, Francine. This call that's supposed to take place at 10 a.m. Eastern Time, 4 p.m. Central European Time, the call between Donald Trump and Vladimir Putin, the call that Donald Trump said last week after sort of overtures and discussions and failed to make any kind of breakthrough on getting that 30-day ceasefire that the Europeans, the Ukrainians, and the Americans have been paying for, the phone call that Donald Trump says has to take place in order for there to be any meaningful progress on the issue of Ukraine. Whether or not that will be the case, you heard a lot of skepticism about it. I mean, you're about to speak to Kaja Kallas. I caught up with her on Friday. She says basically that Putin is just playing games, and that's really the sentiment that we've been hearing from a lot of European leaders. And of course, for Zelensky and for the Europeans, it has all been about convincing Donald Trump that Putin is the impediment to peace, that the real problem lies with Putin. We've seen Zelensky really change his tack ever since that disastrous Oval Office visit. We've had a huge amount of diplomacy over the last 48 hours. We had Zelensky speaking with J.D. Vance in Italy over the weekend, the first time they spoke since that Oval Office visit. We also had Giorgia Meloni, Friedrich Merz, Keir Starmer, Emmanuel Macron speaking with Trump yesterday, and that all just trying to push Trump in that direction towards those sanctions that we know have been prepared by Lindsey Graham, the so-called bone-crushing sanctions, the secondary sanctions, which would target third-party countries that buy Russian oil and gas if the Trump administration is convinced that Putin is the impediment to peace. We will say that they are not yet convinced of that fact, but regardless of what happens, Francine, regardless about whether or not there's going to be any sort of significant progress, what this is all pushing towards is the United States having to make a decision. Is Putin the problem? Is Zelensky the problem? Or is the problem too complicated and the U.S. needs to admit it needs to step back? We're getting closer to that with this phone call between Donald Trump and Vladimir Putin.
Now, Ali, a pro-European centrist has beaten a far-right Trump loyalist in also Romania's presidential election. What more do we know?
Yeah, so listen, Francine, the politics are really fascinating across all of this. I mean, there's been a competitive category of what sort of political story in Europe has been the most interesting and the most sort of controversial over the last, couple of years. I think Romania really is in a position to claim that title because, of course, it was a very sort of stark contrast. You had an ultra-nationalist, anti-EU, Eurosceptic candidate versus a centrist, sort of moderate, pro-NATO, pro-EU candidate. That is who won in the end. Nico Jordan won the election. So that was sort of high stakes enough. But the real fact of the matter is this was a rerun of the election that happened back in November that was canceled by the courts in Romania because basically an unknown candidate won 22% of the vote after they claimed, the mainstream parties in the courts, that were basically being gassed up and promoted on social media by the Russians. This, of course, also caught the attention of the U.S. administration. It was part of J.D. Vance's speech in the Munich Security Conference where he basically accused mainstream European parties of basically ignoring democracy and canceling elections whenever it suited them. So for Romania, at least, hopefully it ends this sort of period of total political instability, which has had a real effect on the markets, and that can move forward. Now that you've had a decisive vote, you have one of the highest turnout rates in 25 years, and the Romanian people have chosen at this stage to go with the pro-EU and the more mainstream politician, who is also, we should say, an independent, so sort of a rebuke to the mainstream politics of Romania, but not going to the sort of ultra-nationalist, sort of anti-EU tack.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, other stories we're following today. Portugal's ruling centre-right coalition has won the country's snap election. Now, according to early results, the Prime Minister, Luís Montenegro's coalition, got nearly 33% of the vote and increased its seats in parliament from 80 to at least 89. The vote saw the far right and the socialists compete neck and neck for second place, rocking the two-party system that's dominated the country's political life for 50 years. Now, the mayor of Warsaw is poised for a narrow win over a pro-Donald Trump nationalist in the first round of Poland's presidential election. An updated exit poll suggests the ally of Prime Minister Donald Tusk is set to win 31% of the vote. Now, the candidate of the opposition Law and Justice Party is heading for a second-place finish with 29%. The two will face each other in a runoff on the 1st of June. Now, we're also just getting some breaking news on Israel, and the Prime Minister, Benjamin Netanyahu, says the IDF will gain control of the entire Gaza Strip. Now, this is, breaking news just a couple of minutes ago. He says aid to serve as a bridge until secured areas have been set up. The Israeli Prime Minister has acknowledged pressure from allies in the decision to resume Gaza aid. So we'll keep, of course, up to date with any breaking news from Israel and Gaza. This is a picture across markets. Let's also have a look at what the impact of Moody's downgrading the U.S. has been. Now we look at treasuries, we'll look at dollar, treasury sliding, Stocks a little bit on the downside. The downgrade led to a drop in U.S. equity futures, steepening of the yield curve, and a weakening of the dollar, with investors seeking haven assets like gold. We'll have plenty more from the Qatar Economic Forum here in Doha. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Doha, and these are your top stories. Sell America is back. The 30-year Treasury yield tops 5% for the first time since April. U.S. futures fall, and the dollar slides after Moody strips the U.S. government of its top credit rating. Well, President Trump is set to speak on the phone with Russia's Vladimir Putin as Washington looks for progress after last week's failed peace talks between Moscow and Kiev. Plus, resetting relations, EU and UK negotiators are said to have reached a deal to strengthen their post-Brexit relationship ahead of a crucial summit today. Now, currencies and stock markets in developing economies have gained for 5 straight weeks on signs of easing trade tensions between the U.S. and China, on bets of Federal Reserve interest rate cuts. Now, they've been propelled by a shift away from the U.S. that's pushed investors to look at undervalued emerging market assets. Well, let's get more on the outlook with James Lord, head of FX and emerging market strategy at Morgan Stanley. James, I hope you hear the nice music background as well. It's always good to have a bit of oomph when talking about FX and emerging markets. Thank you for joining us. What's your take on dollar right now, and what does that mean for a lot of the emerging markets?
Yeah, thanks very much, Francine. Thanks for having me. So we're bearish on the US dollar. I mean, we've been bearish pretty much since the beginning of the year and have been sort of revamping our targets as the story in the US has unfolded. But really, we see a couple of key drivers now for a weaker dollar. I mean, one is simply the US growth outlook. Compared to the past sort of 10, 15 years where investors have been used to growth rates in the United States of 2.5%, we think this year is going to be somewhere closer to 0.5, maybe a little bit higher after some of the de-escalation of the trade tensions, but really, a much weaker growth story for the US. This is mostly driven by the immigration outlook, where immigration policy has obviously changed a lot under the current administration, limited fiscal stimulus, but also now facing trade tariffs that are substantially higher than they were at the beginning of the year. All of these things are going to put downward pressure on US growth, make it more difficult to fund the current account deficit, and ultimately put the dollar under some downward pressure. I mean, we're mostly expressing this against the majors in the G10 space, so euro dollar, dollar yen, sort of alternative safe haven currencies that we think will really benefit in a world where you face high uncertainty and slowing global growth. I mean, ultimately, given the targets that we have for euro dollar, we're seeing it going to 120. Dollar yen, we see heading down towards 135. Like that kind of dollar weakness is you're going to see emerging markets benefit as well. But I would say that the emerging markets will probably underperform on the crosses like euro and yen.
Yeah, James, I was going to ask you actually about dollar level, which you've so kindly provided right now. But are you expecting actually a lot more sell-off of U.S. assets, especially after the Moody's news overnight?
Well, I mean, the Moody's news overnight is, something that, given that S&P and Fitch moved on their credit rating some time ago, I think most investors have sort of incorporated when they look at average credit ratings. You've had 2 of the 3 major rating agencies already downgraded the U.S. So from that perspective, I don't think this changes a huge amount in terms of, what investors technically have to do with their Treasury holdings. But clearly, what we've just been through with the U.S. fixed income market and the FX market in April, investors are highly sensitive to anything that suggests that the U.S. term premium outlook, anything that introduces more term premium into the U.S. curve. And I think what the Moody's decision does, it just keeps the conversation going. We've obviously got U.S. budget bills working its way through the legislative process, and everybody's watching to see how much more Treasury supply there will be. We're very much in the camp of steepeners and are expecting to see more term premium coming into the U.S. market, and that will put some downward pressure on the dollar as well. So, we're not talking about moves that should be really concerning for anybody. I mean, we're just talking about a move in euro dollar to 120. It's not nothing out of the ordinary, really. But we do think we're going to be in a period of dollar weakness through the rest of the year.
James, could you talk to me a little bit about flows into, again, emerging markets? What's that looking like? And is it, broad emerging markets, or are certain regions doing better than others?
Yeah, so I mean, in the flow data that we can see, when you're looking at investments into emerging markets, you can clearly see that there is a preference at the moment for non-dollar denominated assets. So moving into local currency fixed income and away from hard currency. Local currency fixed income in emerging markets has been not really seen much in the way of inflows for many years, mostly due to dollar strength. And so now that the dollar trend is changing, you are starting to see that flows come back. I mean, at the beginning of the year, it was quite focused on the CEMEA region. I mean, I think this was partly due to, the rising euro and the expectations that German fiscal stimulus might boost regional growth. So I think, the European markets were sort of benefiting from that. But more recently, really since the beginning of April, you've seen a much bigger shift into Asia. So you've seen, from the regionally mandated fixed income funds, most of the flows have actually been going into Asia markets, which is interesting. I mean, maybe this is related to some expectation of flows coming back to the region following the tariffs that were implemented. Maybe there was, Asian investors have been obviously huge investors into the U.S. markets, and as the tariffs were unfolded, very much affecting large parts of the Asia region, it's possible that some of these flows were now being repatriated and invested more regionally.
James, when you look at emerging markets broadly, I don't know what you do with renminbi, and again, if there's something that you'd stay away from right now, given all of the trade and tariff dynamics.
Yeah, I mean, our preference at the moment in EM is to really find the bottom-up stories where we have a lot of conviction in and provide some idiosyncratic kind of anchor or domestic anchor in the face of, a lot of global uncertainty. So, the bottom-up reform stories are the places that we're really interested in, and these are places like Turkey that obviously had a bit of a scare in March, but we think it's time to be for investors to start reconsidering that trade again. We've been very much bullish on the Egypt story as well. So, the sort of slightly smaller markets where there are, solid reform stories underway, I think these are the places that are going to provide a lot more alpha to investors who are thinking about exposure to EM. I mean, on the renminbi, clearly there is a growth slowdown underway as a result of the tariffs that have been implemented. We are expecting weaker growth this year. I'm not sure that you're going to see much renminbi depreciation, though, relative to the dollar, considering the dollar outlook that we have. The renminbi is getting a bit of a devaluation or depreciation in its value just simply on the crosses. I mean, keeping the currency fairly stable against the dollar means it is weakening against the yen, it is weakening against the euro, and the CFETS basket that the PBOC manages is clearly heading down. So I don't think that there's much more that's required in terms of a valuation adjustment beyond like the trend that we're seeing. So I don't really see much sort of impetus for dollar renminbi to head up. But I do think that being short renminbi versus things like euro, things like yen, I think those sorts of ideas are things that investors should look at.
James, I mean, of course, a lot rides on, I think it's July 8th, where it's the end of the 90 days, and then possible negotiations between the U.S. and China. Could that be a game changer in terms of flows and also where you see everything headed?
I mean, I don't have a very strong expectation of what's going to happen at the end of that 90-day period. I mean, obviously, we're in that negotiation phase at the moment. Treasury Secretary Scott Bessent, I think, was just saying yesterday that clearly tariffs could go back up if there was any sort of sense that negotiations were not moving in the right direction. So I think investors face significant amounts of uncertainty around the tariff outlook, and I think that uncertainty is something that really will weigh on the dollar. I mean, it's not an environment where investors are getting a lot of clarity. Even as we've seen tariffs come down, it has been associated with a rally in risk assets, but the dollar remains very, very weak. And I think this largely reflects just the huge amounts of uncertainty that there is about investing in the US at the moment. What kind of tariff regime, what tariff outlook will you be facing over the next few years? Things can change like multiple times as we've noticed. And I think that sort of uncertainty will make it harder to attract funding for the U.S. current account deficit, and is one of the things that will put some downward pressure on the dollar.
James, thank you so much for joining us. James Lord, their head of FX and emerging market strategy at Morgan Stanley. Now, the world's largest EV battery maker is also making the world's biggest listing this year. Now, the Chinese giant CATL debuts in Hong Kong tomorrow after raising $4.6 billion in a secondary listing. Well, Craig Trudell, our global autos editor, joins us. Craig, good morning. So what are CATL's aims with this listing?
Well, $4.6 billion is obviously a significant amount raised for this company. But I think it's also just, the fact that, in the face of this global trade war where China has been at the center and where the electric vehicle sector within China has really been a target, it's just been remarkable to see CATL, sort of go from strength to strength. Obviously, they are pretty insulated from the U.S. tariff story, given that they were already shut out of that market, before things, sort of ratcheted up and continued to ratchet up. There's some potential, of course, for them to at least partially crack the U.S. market in the form of these licensing deals that they've reached with, first with Ford, potentially with Tesla in the future. I also think, just the ways in which they continue to lead from a technology perspective with, just a few weeks back, BYD making a lot of noise with the amount of charge it was able to pull off in 5 minutes. CATL one-ups them just in a matter of days. So, this listing is effective also for just, continuing to get the name out there, the familiarity with this company. They've really become a force in the automotive sector, and it's so widespread, as we saw with, the customers that just flashed on the screen, just how broad they are in terms of, how many manufacturers they serve now in this industry. This is if you're making electric vehicles, it's quite likely you're using CATL batteries for those.
Okay, Craig, thank you so much. Craig Trudell, there, Bloomberg's global autos editor. Now, NVIDIA chief executive Jensen Huang has unveiled technologies from faster chip systems to software aimed at sustaining the boom in demand for AI computing as competition in the industry, of course, becomes more competitive. Now, Huang opened Asia's biggest electronics forum, Computex, in Taiwan, with an update on timing for NVIDIA's next generation GB300 systems.
This year, in Q3, we'll upgrade to Grace Blackwell GB300. The GB300 will increase the same architecture, same physical footprint, same electrical and mechanicals, but the chips inside have been upgraded.
Well, Ryanair shares have gained this morning after Europe's largest budget carrier said it's seeing strong summer demand as it reported earnings and announced a €750 million buyback. Well, the chief executive, Michael O'Leary, spoke to Bloomberg's Tom McKenzie a little earlier about the outlook.
I think our experience with Trump and the tariffs is, he talks tough and then they walk it back pretty quickly. You saw the deal with the Chinese, the deal with the UK. I'm not sure it will. I'm not that worried about tariffs on commercial aircraft.
Does the deal with the UK and the US, does that mean you could source the aircraft from the UK then? Would you look to that?
It's a possibility. I mean, one of the alternatives is we could take the aircraft in through the UK, but ultimately we have a fixed price agreement with Boeing, and our discussion with Boeing, our tariffs are Boeing's problem, not ours.
Well, Charlie Wells is here with a deep dive on the numbers. Charlie, so what stands out in Ryanair's earnings report?
Francine, so this was a very solid set of numbers for Ryanair, despite a lot of the uncertainty that the airline sector has seen across the board, a lot of that uncertainty in the midst of the trade war. Also for Ryanair, they exclusively fly Boeing planes, and there were delay issues, but they still were able to deliver profits after tax for the prior year that came out on the higher end of their guidance. The airline said that they are not able, at least at this time, to provide guidance for the year ahead, but Michael O'Leary, the CEO of the company, was relatively optimistic when he gave an interview to Bloomberg News earlier this morning. And one of the reasons why, if we take a look at some of the fuel price changes that we've seen over time, you can see that he was able to hedge, despite, given the uncertainty, he's been able to hedge and kind of lock in something of a discount on that fuel price. We also heard about optimism about that all-important summer sales season. They've expanded a number of their routes, and they see an optimistic outlook for summer sales, increasing passenger numbers there. And it's really interesting. It's sort of creating this divide within the European airline space where you have a number of these firms that exclusively fly in the region, in Europe, into the Middle East, maybe points slightly farther afield, but not exposed to that transatlantic routes. And you see those airlines, I'm thinking IAG, I'm thinking Lufthansa, under a little bit more pressure, or at least not performing quite as well in the market compared to the likes of Ryanair or Wizz.
Charlie, thanks so much. Charlie Wells there with the very latest on airlines. Now, there have been some big market moves, so let's look at the U.S. 30-year yield actually rising to 5.02%. It gone above 5% about 2 or 3 hours ago, and that's the highest since November 2023. There's a lot of market moves also on the back of the Moody's downgrade. Coming up, we'll be joined exclusively by Robert Friedland, the founder of Ivanhoe Mines. This is ahead of the start of the Qatar Economic Forum. That's next, and this is Bloomberg. Welcome back, everyone. I'm Francine Lacqua here in Doha, where we're ready for the Qatar Economic Forum, which kicks off in full force tomorrow. Now, the tariff truce between the United States and China has brought some relief to commodity markets, which had been hit by the trade war, which dented the outlook for economic growth. Now, tariff uncertainty, of course, sparked a heavy sell-off in metals. While there's been some recovery in prices, concerns about the impact of tariffs continue to linger in the sector. Now, joining us now is Robert Friedland. He is founder of Ivanhoe Mines and iPulse, which is not affiliated with the Pulse. Let's just make that clear, Robert. But I love interviewing you because you're the king of commodities. You understand copper and copper demand more than anyone. Where are we in the cycle?
We need copper for everything. We need copper to keep these lights on in the studio. We need copper for the greening of the world economy. And as we balkanize the world economy, in no small part due to tariffs, we also need copper for national security. So we're going from a sort of integrated, just-in-time world to a just-in-case world. So everybody's scrambling for copper and other critical raw materials.
Yeah, I mean, you secured, like, Santa Cruz is one of the big projects, right, when it comes to copper. As everyone tries to get more copper because there may not be enough of the stuff, what are the plans for Ivanhoe?
America is very anxious to rebuild its domestic copper mining industry. In fact, its mining industry for all critical raw materials. So Santa Cruz is in Arizona, where about 10% of the world's copper has been mined. It's on private land. It'll be a super green, ultra modern new copper mine on private land in Arizona. Just exactly what America needs. I'm happy to say US Exim Bank sent us a letter expressing support for long-term debt financing for the project. And there's a lot of hoops to jump through to get everything right, but that mine has a very bright future.
Can you give us a timeline on when you're expecting it to, to get stuff out of the ground and then, like, peak output?
Normally, to get to where we are today, it'd take about 15 years. You have to find it and drill it and study it and engineer it. So we're on private land, which shortens the permitting process. And the new administration is very friendly to the permitting process, especially on private land. So there's no federal permitting. So we should be in production in late 2028, in about 3 years, which is tomorrow morning by mining standards.
And that's quite exciting. You're in the region. Is there anything that you're looking to buy or any deals to make, either with Qatar or Saudi Arabia?
Of course.
Always. And they are?
No, we already have a partnership with the Kingdom of Saudi Arabia. We have 50,000 square kilometers in a partnership with the kingdom to look for copper and gold and other critical raw materials. And that work is now underway. We're very happy with our Saudi partnership. And we're talking to all of the regional governments here because most of the world's undiscovered critical raw materials are in Islamic countries. Islamic countries are quite underexplored. So the Kingdom of Saudi Arabia has a great mineral endowment. And from this area, in the center of the world, with all these airlines coming here, you can look at Africa, you can look at Uzbekistan, Kazakhstan, all those parts of Asia that have never really been properly explored.
Robert, can you give me again a sense of like the timeline of what you're expecting to find, and what kind of capex are you putting into these projects?
Billions and billions of dollars. Mining is capital intensive. We've invested over $40 billion in mining in the last 20 years in our own group. So we have a very big mine in Kazakhstan, a very big mine in Mongolia, a very big mine in the Democratic Republic of the Congo. Close to $8 billion has been invested there. So these are capital-intensive, long-lived assets at the bottom of the world cost curve. They'll go for generations.
And again, in terms of when you're expecting to find something, because you need billions to explore.
Only Allah knows when we're going to find something. So, the exploration process is high risk, high reward, and is now very technology intensive. So we use pulse electrical power injected into the earth to light up water or metals at a great depth. And there's a lot of software, a lot of AI. So there's a hardware system and a software system combined. So we have a huge confluence of all the world's new disruptive technologies. And that disruption has come to exploration and production. What we do is a lot like a CAT scan or an MRI. If you have a problem inside your body, we're non-invasively looking at the earth to see what's there, rather than drilling holes all over the place.
And this is what iPulse, right? When are you?
Well,
I mean,
it's
the
a division
iPulse is
of
kind
iPulse.
of
that technology was spun off on the New York Stock Exchange as Ivanhoe Electric, and we're using that technology in Saudi Arabia in a partnership with the National Mining Company of Saudi Arabia.
When will you IPO iPulse? If you'll IPO iPulse, is that on the cards?
We've been private 20 years, and we'll save that for a future announcement. But we became a unicorn more than 10 years ago, so we're a well-financed private American company.
Are you expecting actually your site in Arizona to benefit from the Trump administration push to give more permits? Quicker.
Yes. Well, we don't need the permits because we're on private land. So the permitting authority is the state of Arizona, and they understand mining. Mining has been done in that part of Arizona for generations. So I'd say they're friendly and realistic about the permitting process in Arizona.
Give me a sense also, I mean, Congo you've mentioned, right? You've built one of the biggest copper mines actually in Congo in the world. How big is that project going to get?
It's an enormous project. There's 30,000 people working there, and it's going through several stages of expansion. So it's the largest new mine on the African continent. We're building the largest smelter on the African continent. Women are working in that mine. They're empowered there. There's a great relationship with local communities. It's very high grade. It's very green. It runs on hydroelectric energy. And it's grown faster than any copper mine in the world, and it's still growing.
And do you think it'll grow at the same pace?
It should, God willing. Yes, it should. Yeah, we've already completed the third phase of expansion, and soon we'll be announcing the numbers on the fourth phase, and we see a fifth phase of expansion as well. It's currently running today as the third largest copper complex in the world.
What are you most excited about? I mean, viewers won't know this, but I sometimes bump into, Robert Friedland in corridors at conferences like this, and you show me, mining gadgets. I mean, you absolutely love what you do, and you're excited about some of the new technologies. What are you most excited about now?
We need a new way to mine. We need a better way to find mines. We need a better way to crush and grind rock without using so much electrical energy. If you need a data center for big data, you need astronomical amounts of electrical energy. Bitcoin uses huge amounts of energy. These studios use a huge amount of energy, all these bright lights. And so we really look like we have a problem for certain critical raw materials over the next 5 to 10 years. And so we have to reinvent the whole enterprise. And that we're doing with Pulse Power. It just happens to be that this show's called The Pulse.
It's a good name.
Yeah.
It's a very good name, Robert. But how much energy are you expecting to? Is it, can you cut energy consumption?
Yes.
Looking for this by 20, 30%, or even more?
Yeah, even 80%. So
80%.
What we're doing is we're taking very small amounts of energy and compressing it with supercapacitors to create huge amounts of power. A lot of people are confused, thinking that energy and power are the same thing. They're not. No. So this technology was used in weaponry, strategic weaponry. It's used in electromagnetic pulse weaponry. And now we're using it for civilian application, authorized by a Western government, to find a more energy-efficient way to do things. And we really need to revolutionize the mining industry if we're going to find and develop the critical raw materials we need to have a better world.
Robert, thank you so much, as always, for joining us. Robert Friedland, the founder of Ivanhoe Mines and iPulse. Now, we'll be live all week here from the Qatar Economic Forum in Doha. Guest highlights include Elon Musk, Steve Mnuchin. We'll be speaking to Donald Trump Jr., the QIA chief executive, and JP Morgan Chase's Mary Erdoes. Also joining us, the Turkish finance minister, Mehmet Şimşek. This is Bloomberg.